The US Medicare Advantage insurance segment continued its strong earnings trend in 2019, increasing by 11% to $279 billion. I'm John Weber for AM Best TV. Here to talk about this segment is Bridget Maehr, Associate Director at AM Best, and Antonietta Iachetta, Senior Financial Analyst. And Bridget, we're going to start with you. This segment has been on a strong profitability run over the past 4 years. What are driving those results?
Well, John, the margins in Medicare Advantage business are relatively low. They range around 1% to 3%. So the strong results are actually being driven by enrollment growth in the business segment. And this growth is being driven by the aging population, as well as more people selecting Medicare Advantage plans offered by insurers over traditional Medicare. Medicare Advantage is a very complex product, and insurers need to run efficiently to maintain profitable offerings. They need to pay careful attention to quality metrics for the Star Bonus program, as well as medical management and care coordination for their members who are older and are more likely to have chronic health conditions. On top of this, health insurers need to ensure that they are getting accurate data from their providers for risk adjustment programs.
Antonietta, to what extent has this segment been impacted by the COVID-19 pandemic?
Sure. COVID-19 so far has had a modest impact on the segment, as well as the industry as a whole. Generally, the deferral of elective procedures and non-urgent care has more than offset testing and treatment for COVID-19 today. The deferral of care, particularly elective procedures, occurred across the United States in the early days of the spread of the pandemic. But even in the states where they were not having a significant impact at that time, we've seen a phenomenon. Many Medicare Advantage members, especially those with chronic conditions or they are at high risk, have been taking precautions by staying at home and using telehealth rather than visiting doctor's office. Insurance have been responsive to this and have expanded access to care to its members to ensure a continuation of both care and access to it. Insurance have provided alternatives such as telehealth and virtual visits as an alternative to in-person visits. Also, many companies have waived members cost sharing for these services.
The report suggests that despite the overall strong earnings, not everyone in the segment is performing favorably. Bridget, how do the earnings break down when you take a closer look?
The more profitable plans are those that have achieved a certain size. Plans with over $500 million of premium revenue are the ones we see as having more favorable operating performance metrics. Scale provides an advantage for administrative expenses as well as provider contracting. Product pricing is quite competitive in this segment for the population of the people who are over 65. They are price sensitive. So those plans that can offer products with low member premiums or cost sharing do have an advantage in enrolling new members. Additionally, due to the aging population and growth potential, there have been a number of new entrants into this market. And the cost to build the infrastructure to service Medicare Advantage products tends to drive losses in the earlier years.
And looking past the leaders, how challenging of a market is this for everyone else, Bridget?
There are a number of plans that are profitable just at a smaller scale. They may be just in a smaller geography with good brand awareness, good provider relationships, or strategic partnerships. But Medicare Advantage, as I said, is a complex market. There's an annual bidding process. There's compliance, which is very key because it is overseen by the federal government, CMS, who can put sanctions on plans if they don't adhere to the rules. There's a lot of moving parts that they have to keep on top of. And, although there are successful smaller plans, it's usually with a strategic partnership.
Antonietta, what does AM Best expect in regards to medical loss ratio trends?
Sure. During the first half of the year, MA riders have experienced a significant drop in their loss ratio from the decline and utilization from members that have put off surgeries, elective procedures, or even care visits in the first half of 2020. So while insurers have incurred claims related to COVID, lower utilization for non-urgent medical care is more than offset that. MA riders need to adhere to an 85% loss ratio for their health plans, which means that falling below that, they would have to refund excess to CMS. But insurance have taken different steps to prevent them from happening. So while utilization for non-urgent and elective medical care is anticipated to return to more normal level for the second half of 2020, many health carriers have also waived co-sharing for MA members for care visits, telehealth through either September or through the end of the year. Again, health insurance have been proactive, reaching out to MA members, in particular those who are more vulnerable, just to ensure that their members have access to prescriptions, treatments, meals. Utilization expected to return to more normal levels in the second half of 2020. However, there is a possibility that carriers could see a loss ratio that could dip below 85% for the full year. And that's dependent on the progression of the pandemic and the impact that it has on individuals' willingness to visit providers. In addition, another widespread shutdown, including deferral of elective procedures and non-urgent care, could also result in decline in claim volumes.
Thanks, Antonietta. Bridget?
Thank you, John.
Thank you very much.
That was Bridget Maehr, Associate Director at AM Best, and Antonietta Iachetta, Senior Financial Analyst. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.